Boston is not a cash flow market, right? And I try to tell that to people. It's if you're looking for insane strong yields, 8-10% cash on cash, the stuff that you might read on like blogs like Bigger Pockets, like Boston is not your market. I'd say on average here in Boston, if you're buying a multifamily and you're putting 25 to 30% down, you can probably expect somewhere in the vicinity of maybe 3.5 to 5% cash on cash. That's probably the rough rule of thumb that we use here. Today, obviously, with the interest rates going up, that's even less. But prior to the interest rate rise, that was kind of the going rule of thumb. But, that doesn't mean you can't find opportunity, right? So that building I bought, that very first building I bought, I actually was able to make the numbers work real well, right? I bought the building for the low fives at the time. I think it was like maybe 5.25 or something. My debt payment I think was probably coming in around high twos, low threes. But I was collecting probably around $5,500 a month. So it was actually, after you factor in maintenance, OPEX, all that good stuff, I was still collecting, a fair amount of yield from it. But that came from, that what you don't see is about a year, half a year to a year's worth of putting offers in, getting rejected. Because I was I was kind of very conservative with my numbers. I really wanted to make sure I hit it on the head, especially with my first buy. But even today, right, like even as I expanded my portfolio beyond that, it's even though there's rules of thumb, like, yeah, Boston's not a cash flow market. Do we produce some cash flow? Yes, but there's a lot of other different opportunities that, can actually make a lot more money than just your extra 1 or 2% cash on cash return.